Investing in the stock market is a great way to build your personal wealth, and no matter what amount you have to spend, there's always an option for you. The stocks in today's video are all valued between $10 and $20, so offer investors a relatively cheap ticket into investing, whilst boasting more stability than lower value penny stocks. Let's get into it. Pack up your suitcase, because first on our list is Jetblue Airways Corporation, ticker JBLU. The New York-based airline offers its customers affordable options for city travel, as well as flights directly to popular vacation spots across the world. Their focus on low-cost flights is an important factor, as many consumers have felt the squeeze of the recession and will likely be looking for the best possible deals. Although the pandemic did affect their business, the company is seeing a strong influx of bookings, and this means only good news for their revenue. Investors should think about climbing aboard this stock before it really takes off. One household name on our list is General Electric, ticker GE. Known originally for making household appliances, the company has fingers in many different pies, including healthcare technology, aviation, renewable energy, industrial power, and many more. As a regular Fortune 500 company, GE surprisingly struggled financially over the past year. But focusing on debt management, streamlining operations, and redirecting resources to sectors with the highest potential has enabled them to regain some lost ground. Their experience in weathering financial storms could make this stock a great long-term bet for investors. When looking at the best long-term options, stocks that boast high dividend yields are always a good bet, and not many stocks have as good a yield as real estate investment trusts, or REITs. Physicians Realty Trust, ticker DOC, is an REIT that owns medical office space and leases to healthcare providers around the United States. Despite the pandemic, they have seen consistent revenue growth over the last few years, and as medical care is an essential industry, it's unlikely they will be struggling anytime soon. Next up is electronics manufacturing company Flex Ltd, ticker FLEX. The Singapore-based company was founded in 1969 and has amassed a market cap of over $9 billion through the sale of both consumer and industrial electronics. Their diversification is impressive, with involvement in everything from 5G networks to solar energy, and this could play a big role in their growth in the coming years. It's likely the demand for technology isn't going anywhere, and Flex are perfectly positioned to address this demand, so it could be a great addition to any portfolio. Speaking of technology, artificial intelligence is one of the fastest growing sectors right now, and our next company will definitely have a few parts to play in its development. Taiwanese semiconductor company Imax Technologies, ticker HIMX, not only provide essential parts for our smartphones and computers, but are also heavily involved in manufacturing parts for AI technology, even supplying to market leaders Google and Microsoft. This stock gives investors an opportunity to buy into a very exciting future prospect without breaking the bank, and now could be a better time than any to jump in. If you're tired of being ripped off by car garages and are pretty handy with a spanner, then our next stock could be right up your alley. CarParts.com Inc., ticker PRTS, sells aftermarket auto parts directly to consumers, and their revenue growth over the past year has impressed Wall Street. The company hosts a searchable library for consumers, which makes finding the right part a walk in the park. Well, a drive in the... forget it. The pandemic saw consumers warming to online purchases, which spelled great news for car parts, who saw a jump in stock price from less than $3 to over $16 per share. Now could be a great time for investors to buy in and be a part of the journey. Communication is key, and Viavi Solutions, ticker VIAV, are no stranger to this sentiment. Based in Scottsdale, Arizona, the company specializes in testing and assurance solutions for communication networks, as well as offering a variety of other products and services. The ongoing rollout of 5G networks could be a key factor for Viavi's growth in the coming years, as these networks will need regular testing to ensure consistent and reliable service. They also have a number of military and governmental contracts, which only adds to the stability of this stock, which could make it a great option for under $20 for investors. Buying stocks under $20 is a great way to get a portfolio off the ground, as the companies in this range often still have plenty of room for growth. As always, do your research on the company, their business model, and key data such as year-over-year revenue and earnings per share to build a full picture of what you're buying into. It could be the start of something great. Don't forget to like and subscribe to The Stock Dork and comment your favourite stocks below. Who knows, we may feature it in a future video.